How you guys doing? Welcome back. Today's lesson 28. So you bought a runner. Congratulations. You did the thing you wanted to do, if not better than what you wanted to do. You got a price target 10, 15%, and this bad boy's at 60 or 70. Hell yeah. So this lesson I want to give you some insight and some opinions on what you can and should do if you do get a runner. So let's get into it. The first main thing to note is that if you do have a massive runner, no matter what the outcome, if you do get more than your price target, you've already won. Now, you may have a hard time if you sell early and it goes up another 300, 400%. Yeah, it's going to kind of suck to think about, like, damn, I could have had more. You got what you intended on in the first place. You had good technicals, good fundamentals, good everything, good plan. You acted on it. Congratulations. And now I'm going to show you some tips on how you can probably hold better and more efficiently. So this is kind of hard to put into words. I got some good examples, about 4 or 5 from today's runners we can look at, but this will be hard to put into words because every single runner is different. Some are fundamentally drawn up and they just pop up super hard and then immediately come back down. Others pop off and then they kind of hesitate for a little bit, then they come down. Others pop off, come down, and then they pop off even more, and you would have thought, hey, 80% is great, but then you find out 8 months later it's gone up 4,000%, which has happened. The main thing we're going to note is that the main point we're going to talk about is you have to take profit eventually. I know it's going to be hard for some of you to sell a huge runner and be like, I want to get out. But again, you have to take profit eventually. If you never take profit, you're liable to come back down, and you're going to have a way harder time than selling too early, than selling late, and it comes down drastically, and you missed a bunch of profit because you want to be greedy. What's cool with most swing trades is that a lot of these runners have previous highs. They have previous price action over the last 10 years that you can use while it's going up and doing a lot of movements to zoom out and see where possible resistance are going to be. We'll do that today and check these things out pretty well. It'll be pretty good to look at. And we're going to show you how previous price action, historical data, does make a massive difference for these kinds of plays. When it comes to runners, I exclusively scale out. Now, that's what I do. You can have any kind of validation strategy that you would like. You can zoom in and use email lines. You can use resistances. I scale out. I find targets, I hit them, I scale out. If we dip back down, I just sell out there. There's no difference. It goes from $100 to $300. And let's say I want to sell at 200. I sell at half at 200. It keeps going. It comes back down to 200. I sell out the rest of it. That's fine. It would be the same exact outcome if I sold at 200. Again, giving yourself a little bit extra room to let it run up and kind of do its thing and develop is always smart. So I like to kind of scale out. 4 things we're going to talk about in particular scaling out is when we start ripping higher and having more power, we secure some profit. Secondly, how to establish new price targets as we do rip higher. 3, if we can establish why it started ripping, got sent to the moon. What did it? Was it technicals? Was it fundamentals? What did it? Let's research that while it's still going. And then 4, and most importantly, don't get hasty. You may want to sell out, you may want to hold. Give yourself 5-10 minutes to think about. Most runners run all day, they have a bunch of action. Give yourself some time to think about it. With that being said, let's get into today's lesson 28, runners. So with the examples we're going to have today, you're going to see how much more complicated this is than a normal price target. Yeah, when the stock goes to your price target and shows some weakness, you can just take your profit and go home and have a good old time. But when a stock goes from 0 to 60 real quick and goes from 2% gain to 50% gain, it gets real quick because you want to make sure you maximize your profit, maximize your time. Don't sell too early, but again, you want to make sure you secure profits where you can. So I have some examples for you. Let's check these out today and see what we're looking at. So here we have IPA, delicious. No, but this is one that you probably wouldn't have seen coming. Of course, you could have been like, well, it's a descending wedge. It very certainly is. I don't know how valid this would have been. Now, of course, you can see this consolidation is pretty crazy, and it pops off. First thing you're going to notice on the 4-hour chart, it's pretty worthless. I mean, honestly, when these things get ripping, it's really hard to tell what's going on the 4-hour chart. You can zoom in and see so much more clear action. Let's zoom in. So with this runner, watch this. It's not much going on here. Let's just zoom in the 1 minute, 1 day. With zooming in, we can see the volume was pretty trash, but look at this. This is pretty easy to read. We can even see on this chart, previous resistance is acting as a support. We can see this support over here now acting as a resistance. You have some pretty good price action in here. So if you do get a runner, trying to stay at the 4-hour chart, if that's where you chart from, is not going to be very useful. You got to zoom in and see some previous price action. One thing that I want to do here, let's zoom out and see if we can set supports and resistances. Let's see if it's following this on this time frame. So what we can do here is we can come back and find previous supports and resistances. This is obviously one, right? Support, resistance. This right here, support, resistance. This right here, support, resistance. And this right here in this area is a resistance. Off the bat, we can already see this got close, it died, this hit here, then wick came up, and now we're showing some life here, bouncing here. Let's zoom in and see if these supports and resistances actually line up with smaller action. As we can see, it lines up almost perfectly. So that being said, even your runners are going to have some technical analysis behind them. Properly charting them the first time for when they rip up can really show you some great insight. So with this being shown, with this being said, yeah, I'd modify just a little bit. Like I'd move this up just a little bit. Go there. Move this down just a little bit, right about there. And this is fine right here. I throw one more in here just to make sure. Probably right about here. Right, let this bad boy rip, do what you want to do. Actually, let's go there. That's good. Let this bad boy rip, make its move. Playing with 100% moves, it looks good to me. On the way up, could you have made trend lines? Sure, let's look. You can see clearly we had a nice run up just like this, and we can see when it did break down. Let's just use this one here. Our first major pullback. Look at this. On the way up, and again, this is day trading. This is more extremes, of course. On the way up, it had this nice uptrend. This does look like a swing, right? When you kind of zoom in, looks like a swing trade, doesn't it? And then, of course, it came up, it broke, and then what happened? Lower lows, boom, lower highs. Remember that lesson we talked about? The first sign of breakage is a trend line break and then a lower low and a lower high. We have that. So we can see our first lower high here, breaks down, lower low. We're now downtrending. So you could have taken your profit here. Could have taken it probably anywhere from, this area as it kind of comes down. Would have been good to go. But even now, if I missed the initial run, I can see now supports here. This right here is still a 20% move right here using old supports and resistances. So there's a lot of great valid information on this time frame. So for setting price targets, you could have easily used previous action. You could have easily used resistances and taken profit accordingly. It would have been really easy to do that. Let's look at some other examples real quick. So this is IGC. Again, was it possible to capture this? Yeah, I mean, that's a support, but it's not really, how would you have known this is about a 15% area? It would have been very hard to capture. But now it's taking off. Let's find some previous resistances. We have one clear one. Let's see, probably right about here in this area. One clear one right about here in this area. One right about, this is support, and then our top one probably close to here. Let's see if any of this action lines up well with what was going on before. And as we can see, look at this. It's almost perfect once again, isn't it? A lot of these moves on this initial run up right here follow this action almost to a T. So again, previous resistances, previous supports, even on run-ups, are extremely, extremely valid. We can even see over here, what's it doing? Bouncing off this support. Gorgeous. You can even zoom in. You could say, hey, look at this. Higher low, higher low, higher low. Make some trend lines just like this. You could probably easily trade off this channel back and forth, off the support. Easy 7% moves right here. Supports and resistances look great. And again, you have a nice run-up just like this. Okay, run up, bounce, 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 broke down, it came down, it started to die. So even on this massive run up, you can even see when it starts to come back down, technical analysis is still very much alive. We can see right here, this was a small resistance trend line, it broke it, bounced off it, now we're seeing higher lows as it goes higher. When it comes to trend lines up, I don't really see much of a great one, but just like that, a small triangle breaking out. We'll see what it does here. But again, this previous resistance acting as a support area is greatly so old resistances and old supports are even showing relevance on this time frame really, really well. So that's the first thing you should do. If you do have a runner, make sure you identify supports, resistances, trend lines, old stuff that would be a part here. It's very valuable to have that ready to go when it starts ripping up. So just like price action technical analysis, we have indicators. Let's turn those on and see what we see. It'd be pretty worthless to turn on indicators on the 180-day for this kind of play. I mean, we can. You're going to see most likely that they're all kind of janky. As you can see, they're pretty janky. The 10's actually doing pretty good here, but overall, they're pretty worthless. Let's zoom in and see what they show us. So let's do this one at a time. We have our EMA lines first, so let's turn on our EMA lines. So on this time frame, does anything seem to be sticking out to us? Off the bat, it's the 50 and the 10 for me. Yeah, the 200 is important, but most of these major hits and a lot of these are the 10 and the 50. So the 200 you can see clearly, support, resistance, support, resistance. You can see how the 200 is very important, but look at the 50 and the 10. It rode that 10 like a dream. It hits that 50, hits the 50. You see how it just hugs that 50? Look at this downtrend. You see this? Bounce, 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 bounce. So again, I'm not saying you should do it perfect. It's not going to be perfect. But if you want to see Simi hit the top here and then you want to start shorting it, you short here, 9%. It comes back and hits it, easy 14%. Hits it again, easy 7%. So you can start using your EMA lines just like we do on the macro scale, on the micro scale, right? This is beautiful price action for a runner. You can see on the 10, when it gets above the 10, the 50, and the 200, what happens? It gets properly stacked. We've talked about this, but again, when you go price, 10, 50, 200 EMA line, that's properly stacked. You're liable to have your best runs. CEMI shows that again. So if you want to wait for an entry, boom, we cross over all of them, an easy 25% run there. Over here again, right? Because you can say, this is a great example of one that's close, right? But you see the 50s below 200 the whole entire time. 50s below 200, you still get a great run up over the 10. But look at this. Compared to this one, compare that to this. Ooh, price 10, 50, 200. An easy, almost 42% move. And again, over here, the best one. Again, massive run-ups because of that. So if you wanted to wait for properly stacked EMA lines on a day trade like this or on a runner, it's a great plan. Again, it works pretty well. Let's check the other indicators. But again, EMA lines are critical to success with runners. You can then validate out as you need to like that. But let's check out the other indicators real quick. So here's RSI. Again, it looks better on a macro trend, but this is pretty good. Let's use our time level and find every single time it got oversold. Just like this. We'll find every single time it goes below 30 and see how good it looks. And again, this is not perfect, but again, some do look good with this. Let's see. You would have made money. Would have made money. Would have been close, but would have made money. Would have been burned, but then you had the hugest run up. Would have made money. Would have been burned. You would have been burned too. Would have been burned. And you would have been burned. So we can see the RSI in this time frame is not good. So if I'm planning to validate out of this trade because I have a runner, I'm not going to use RSI. Let's check stochastic. So as we can see, it's really, really crazy. Off the bat, I'm not using it. Now, some day trades are not as bad and as volatile. This one is. Off the bat, stochastic is out. It's way too crazy. Let's check Vortex. This too is fairly crazy, but because there's green at the bottom, it's a lot easier to use. And again, what you could do is just sell when green gets to the top and buy when green's at the bottom. It looks like it's fairly consistent. It's not the greatest thing to ever happen for this. And again, I would not be using the Vortex for this one. It's still pretty sporadic. Maybe on the initial push up, you could have, right? You could have seen, oh, we're running up, losing strength, selling out right about here and being just fine. But again, this is super crazy compared to the 180 day. See how it's a lot easier to read compared to there. I wouldn't use Vortex either. Again, every ticker is going to be different. It's obvious. CEMI follows the EMA lines like a dream. I'll be using those every single time. So now that we've established that we had great technical analysis, and again, even run-ups follow supports and resistances. You can set price targets based on that. They also follow indicators. I think the EMA lines are probably the easiest to use, and you find the 10, 50, 200 is the best. It keeps running up those, it crosses back under, you just validate it out, call it a day. You can re-enter if you want to, but again, a lot of these run up and just come right back down. CEMI is doing a pretty good job of holding its own right now and doing pretty well. Let's go back to IPA and check the EMA lines there. I want to see what that one looks like. That might be a great example as well. Let's check it out. So here we're back at IPA. Let's go zoom back in real quick. Here we go. Beautiful looking run up. This is what I want to follow. I want to follow this run up right here. Now again, you would have had a rough time here. You probably would have validated out on the bottom. But again, if you would have held, which again is hypothetical. Let's see if anything looks good for this run up right here. So as we can see, the 200 would have been good to follow. Again, that's in hindsight. Or the 10, the 50. You would have been validated out of both these. But let's say you would have seen this on the morning scanner. Right, it comes down and you see that's bouncing off the 50 well. You buy at the 50, you hold the whole entire 50, you would have made 94% pretty well. If you wanted to buy in and do the 10, you would have had a little more faultiness, but again, you would have been good to go. So even on a smaller time frame, on a whole different stock, it's not perfect, it never is, but we can even see here the 50 and the 10 EMA line for validation. As you go up it crosses back under, you get out, looks to be working pretty well. So now that we've established supports and resistances work well in these time frames. Indicators work well in these time frames. You can easily validate out with any of the exit strategies we talked about. This on the 1 minute, 1 day chart, the 5 minute, 5 day chart, whatever you want to use. It works great. Let's establish what has sent IPA and CEMI into the moon. So if this is in the morning, you want to check your scanners, you see you're holding this, it takes off. Let's go find out what's happening. So you can go to any of your favorite websites. Let's go to TipRanks. That's my favorite that I talked about, one of my favorite ones to look at. CEMI. Let's see. So if I see that's streaking right here, I can see the price target has not moved at all. So it must have been something significant what happened overnight. Let's see. This has not moved at all. It's still saying negative. Let's go to the news button. Let's come down. See this action? Takes off. 3 hours ago. CMI gets 4 million HIV test purchase order. Neuromix in stock joins Reddit-driven rally. CMI bags 20.3 order for SARS. So they're getting a bunch of stuff, aren't they? Tesla and Bitcoin, 5 things must know Thursday. Oh man, so this is not as useful. Best one of the day. Let's see. Is anything else looking good? So you can see they're just getting a bunch of news. Like this is a bunch of news. Right by me, like this is huge. Thank you, Seeking Alpha. But like this one looks pretty good. Let's see what this. I heard about them in the SARS vaccine. So you come in and read and see that they've bagged a $28.3 million per order for its SARS-2 test for bio. A good reading of Brazil. The order will be executed in 2021 to support urgent need for Brazil's Ministry of Health. 19 pandemic. So it's pandemic driven. But as we can see, there is a fundamental reason. So at this point, what I would do is double back and check the fundamentals. Has anything changed as a company now that that's happened? We'll cover that actually in the next after this last episode. We'll cover that next. So again, let's get into that later. Let's check IPA and see if any of these news things have hit them. So we've established CMI had some news. IPA, let's see if they have anything. Again, nothing. It's not running. Chelsea, you've made it on my show. Congratulations. News. Again, this thing has been tanking for a while here. Let's see. Nothing we need. Leeds Healthcare Gainers. Jupiter Wellness, I've called them. Nothing seems to be really sticking out besides the TATX SARS-CoV-2. So I don't see anything massive here. Here's what we can also do. Let's go to the FDA approval website real quick and see if they have any kind of approval dates coming. Let's check that out. So before I leave, you can see growing shares of the market developing IPA's TATX negative 03, added Dr. Jennifer Bath, supporting the advancement of TATX negative 03. So let's go to Google real quick. FDA approval calendar. So we'll talk about this in our next section, but we can see nothing on schedule seems to be popping off for them at all. I don't even see Eton is coming up. I know Jazz pretty well. SGen, a lot of folks talk about. BMY is huge. MRK is coming. I don't see anything though for CEMI or IPA. So we'll go to support trial tracker real quick. So I don't even see IPA on here. I don't even see CEMI either. So there wasn't anything on that website. Let's just go to IPA ticker news and Google. And here we go. This looks pretty good. Let's check it out. IPA stock, 7 things to know about COVID vaccine stock, Immunoprize as shares rocket 120%. There we go. It's COVID related. Again, CEMI and IPA are tied to a massive fundamental issue in the market, and they're here to fix it. Now, again, next section we'll talk about this, but we have now established what their drive was. It was all fundamental news based. Does this have staying power the next 2 weeks, 2 months, 2 years? We'll discuss that in the next series in the fundamental section. But again, you must identify what sent it to the moon. If it's something like lumber that just went up crazy and then just died recently, if it's COVID vaccine related, if it's HIV, SARS related, whatever it may be, a huge government contract, make sure you know what sent the ticker you bought into the stratosphere and if it has staying power. If it can be good for 10, 15 years, you may want to hold or just cut a little bit and let the rest run. So now that we know what sent these two to the moon, what would I do here? What I would do is I would establish take profit areas. Just like scaling out and scaling in, I would take profit slowly on the way up. Let's check IPA to see what I would have done. Now, of course, I didn't buy IPA, so I'm not going to even act like I called this or anything, but we can use previous supports and resistances. Let's just say I bought IPA right here at the bottom, right? It looks good. It's running up. It's running up. These are my past resistances. I probably would have just done this. I would have put take profit here. I would have put a take profit here. I probably would have taken a take profit here a little bit early, right? I would have zoomed back out and seen previous supports and resistances on the way up. I would have gotten ready to take profit in certain spots. And again, if I saw a trend line, I don't see one here, I would have been ready to take profit out as well. What you also could have done is use your EMA lines like I talked about. Use your EMA lines. As it runs up, I would have waited for it to cross under the 10 and sold out. So I personally probably would have validated out somewhere closer to here halfway, and then the other half probably right about here. I would have probably used the 10 myself. But again, if you would use the 50, you would have had a nice clean run up from buying in, let's just say down here, right? You want to buy in low. So you would have held this whole time. You would have validated out here. So again, it's all about planning your scaling out. Just like before, you set price targets. I'm not the greatest day trader or runner holder. I'm not even going to act like it. You may be like, this lesson's pretty good. But again, compared to like technical analysis stuff, not my strongest suit, not even going to lie to you. But again, EMA lines, old past supports and resistances is what I would have done. I would have scaled out slowly, taken my profit, and let it go. The last thing I want to mention before we leave this lesson, I want to make a little bit quicker one, is this. My main goal when these happen is to hit 100%. I would love to have a ticker that hits 100% from what I bought in, and here's the reason why and the math why. If I bought a stock at, let's say, $10, right? I put $1,000 into it, and it ran up to $20. At $20, I have made $1,000 with my $1,000. What I would do is I would sell half my position. The reason I'd sell half my position is I get $500 back from what I invested, plus the $500 profit. That's $1,000. I invested $1,000. I take out my initial investment because the half the reward and half my investment is $1,000. Take that off the table, and now for the next foreseeable 30 years, I have a free long-term investment. I'm only 29, I'm turning 30 soon. If you are young, or even if you're in your mid 40s or 50s, buying a stock like that, it runs on you, selling half your position and letting it run the rest of the time you hold it, it's a fantastic idea. It's a free long-term investment. You know, most stocks over the 3, 5, 10 years make a huge profit. Dividends will be hitting, all these great things. I see no problem selling out my position halfway at 100 and then never touching it again, letting it run and see what I get out of it. That's what I love to do. It's happened a few times. I really enjoy when it does happen. It's a great feeling to know that I have a long-term investment for free. Keep in the back of your mind, it's a great little tidbit for you. So there you guys have it. Again, not my most detailed lesson. I'm not even gonna act like it is, but again, I wanted to briefly cover some ideas for you in case you do get your hands on a runner. What do you want to do? Again, the main message was this: scaling out's never a bad idea. You can use previous supports and resistances. I've almost always seen previous supports and resistances acting as great benchmarks, and you can scale out that way. Or again, EMA lines work fantastic as well too. The main mental analysis note, as I mentioned before, is if you do capture a runner, no matter what happens, if you miss most of it, you still got your price target. If your price target was 10% away, then you got 30, but it ran 200, but all you got was 30%. That's still 3 times better than you thought you're gonna get. That's still a really big dub in my book. And again, my personal favorite goal is trying to hold to 100% and then sell half and get a free investment. That's what I like to do. And there you guys have it, a nice quick lesson on some things to look out for runners. And again, they're very volatile, they're very individual, but again, those 2 tidbits of using indicators, zooming in, and then using supports and resistances and zooming in can save you a lot of heartbreak and a lot of issues moving forward. With that being said, lesson 29, let's wrap a pretty little bow on this and get on to our next section, fundamentals. Lesson 29 coming up now. Thanks.